Holy crap, the Fed, the stock market, we got to talk about it. I am Dr. Stock, Doctor of Education, and I am so excited for this video. I don't even have a joke ready. I'm just kidding. I actually do. Santa Claus's wife said to him, I cut all my nails. Well, I guess now she's Mrs. Claus. That joke was not good at all. I don't even care. I'm so excited about what's going on in the markets, what the Fed had to say, what they showed us through their summary of economic projections. We're going to talk about all of that, take a look at the summary. It's going to be absolutely awesome. I'll tell you how I've been playing this market, and I'll tell you where you can find that. I'll tell you also about my options course and also about those free stocks from Mumu. In the meantime, I do want to get over to the summary of economic projections because holy cow, based on what I talked about in my earlier video, if you watched it, you should check it out because it played out pretty much as expected, but even better than expected. And what I said about the federal funds rate came to pass, and that was awesome. So here's the summary of economic projections from today. For release today, 2 p.m. Eastern time. It's currently 3:53, so the market's not even closed yet. So it'd be pretty cool to see in real time as I record this video what's going on with the markets and the plays that I put out there. So take a look at this table. So a few things. First of all, I said that we're already at 2.3% as of the Q3 numbers that we have for GDP. 2.6% for the year means another percent onto what we already have. So we could even possibly exceed this number should the consumer strength hold out for GDP for the end of this year. So we absolutely want to be watching that one. So we got a nice upgrade there. Unemployment rate, I said probably unchanged. It was. PCE, I said they couldn't possibly keep it at 3.3 or 3.7 because we are at 3.5 where they have 3.2 now. So they see an even bigger drop for PCE. We have two more reports for that, by the way, which we won't get them. One is December 22nd for PCE. The other one is at the end of January. So we'll be watching for both of those to see how close the Fed was with these numbers for their expectations. But this is signaling that they do expect inflation to continue to decline, and they also expect that they are done at tightening. Nobody wrote down any rate increases at this meeting. So that is a nice way to signal to everyone, to the markets, everything, that the Fed is 100% done with their raises unless something changes with inflation. And you can see from their PCE inflation expectations that they don't expect that to happen. Federal funds rate down to 5.4. We figured they wouldn't get one. We thought that would be moved down. It did. Here's the big one, actually big two, because what we have is both of these numbers. To end of 2024, we got a 225 basis point or 150 basis point cut already priced in for this midpoint value that we have from the Fed. Before that was 5.1. I didn't think they'd change it at all. I was going to say if that does drop down, it's going to be a huge catalyst for the markets. It's going to be a lot of upward pressure for the markets, and that's precisely what we got. And a further rate hikes on top of that for what we see going into 2025 and long run has not changed, also expected. Now, there's some other things that we need to see going all the way over here. So 5.4 pretty much locked in, but these are what you need to see as well. So this is the lowest value seen all the way down to possibly 3.9% for the federal funds rate is the low that was put in. 5.4 was the high. Look what it was back in the September numbers that came out. 50 basis point lower on the low end and 75 basis points lower on the high end of that. That is absolutely incredible to see those changes there. So that's the Fed signaling us to, in a way for the markets, that it is okay for a little while longer to climb a little higher. And so with that said, I want to actually bring that down and I want to get into the charts on this. And we're actually going to start off with QQQ. And I said that there was going to be an outperformer out of the indices. And I'll tell you what, looking at the numbers here, I was right. It tripled today's performance in the Nasdaq and also had some options out on that one. So that was pretty cool to see that happen. So let's bring that down and we'll pop the charts up. So here we go. QQQ. Right now, we're at 402.97, and the market's going to be closing in like 5 minutes. But we have all the things that we need to see because this yellow line right here, let's actually go out to a weekly basis to check this out so we can see a little bit better on screen. And we'll zoom in here because our high that happened going all the way back to the week of the 22nd of November in 2021 peaked out at 403.44. Let's fast forward to today. Today is that day. Mark this historic occasion that we put in a new all-time high in the Qs for this one. We put in that high price coming in at 404.36. So check that out. That was awesome, astounding, and incredible. Let's drop back to the dailies to see what that looks like. And just look at that. The fact that we have such a strong uptrend going on, and the fact that we were able to carry on top of it has been incredible for us to watch that carry on and also put in that new all-time high. I said that we would find resistance up there. So far we have. I wouldn't be surprised if Possibly in the short term, we retest that support, but I also wouldn't be surprised at all if we continue just a little bit higher when the market comes out throughout the rest of this week. I don't think that it's just that one and done catalyst for us. I think it's going to take a while for sentiment to change. I think that there's still a little bit more punch left in the party to be experienced over the next several weeks. So I said new all-time high December, January. Here it is today. I said possibly with the Fed meeting it would happen. We have the S&P, SPY, outperforming the Nasdaq 100 as we look at it here, up about 1.25%. Look at it breaking that all-time high, and that all-time high was 467.13. Today, that high being put in 470.76. That is a clean break above the previous high, like 0.5 to 0.75 of a percent higher than what we had before. Let's go to a weekly chart just because it's worth taking a look at. So going out to the weekly chart as we have it on here, this week was all the way back in the 3rd of January 2022, and then it took all the way until 2023, and we're looking at the week of December 11th, today actually being December the 13th, which by the way is Taylor Swift's birthday. Yesterday was the 22nd anniversary of my time starting at Denny's. 12/12/2001 is when I started my job at Denny's. I worked there for 5 years, and I'll tell you what, it was a very formative couple of years and taught me a lot about myself. So let's move on from there back to the markets. Now the outperformer, the big outperformer I said would be IWM, which tracks the Russell 2000. For this one, up over 3.5% as I talk about this, as I record this. We actually broke up above that 192 level. As we look at this, I thought 192 would find resistance. Check out that volume too. That is a big movement. We are not done with this uptrend, and I did have an options play out on this one, and I cashed in. I have it here. Let me see. This one I took a 36% profit on that options play for IWM. And honestly, if I would have held on, I think I cashed in when this was at about 190 or so, and it was before Powell came out to speak because I didn't want that to be downward pressure. I was like, you know what, I'm not going to be greedy here. I'm just going to take it, and it's going to be great. So I did that, and then I had another one that I cashed in on around that same time. That was actually Mara, which I'll tell you what, Mara, so that means that Bitcoin's also doing well. Mara, I said, could come up to about 17, and we're at 16.74 right now. And again, I cashed in on this one somewhere close to $16 per share on the options play on this one, 27% profit on that one. Now for a few others, Enphase, I said that should we have good inflation news from the Fed, I said that this would be incredible that we'd have the two big catalysts, CPI and the Fed. CPI didn't pan out for us. Matter of fact, we had kind of a dumpy day yesterday. Fed came out and they're like, you know what? We don't see the federal funds rate being as high. This is an interest-sensitive part of the market. With the solar stocks, Enphase I thought would do pretty well off of that. And I am currently, let me actually pull that number up, on the options play that I took on that after we got the numbers from the Fed, but before Jerome Powell spoke. I'm up 60, almost 61% on that, just 2 hours, less than 2 hours after I purchased it. And I think that this is also going to carry on a little bit longer yet. So just in case you're interested, I took the $100 strike price. January the 19th is the expiration date that I took on that call option play, and 60% up, I'll take it. And I'm actually going to ride this out a little bit. I'm looking for 112. That first target is going to be incredible. After that, I can initiate a stop loss on that one, trailing stop if I can here, and we'll see how that plays out. And by the way, another options play that I took today was TQQQ. I went triple leverage on it, the $47 strike. That one's up almost 30% from the time that I took it. And that was before we got the numbers from the Fed, as I saw that we had a descending wedge on the Qs. So let me see if I actually have those technicals drawn on here. Let's go down to the minute chart. And let me see. There we go. There's the descending wedge that I was tracking. Purchased the TQQQ. As I go, it's only 3 Qs. T and 3 Qs. Got that, and check that out, man. Look at that rip that we saw there. I only wish that I had the opportunity to day trade during that time, because I most definitely would have taken the risk of just a few $100 would have turned into several $1,000s with the 0 DTEs on something like that. And so that was pretty darn incredible to watch that take place. And just a few other things. Like, actually, let's go back to Mara for a second, because I do want to drop by BTC just to see how that's doing, because this is the reason for Mara moving the way that it is. So this one actually just peekaboo down below support for a little bit, but notice back here on that big volume day on Monday the 11th, we actually closed above support. Good. And then the next day, even though it went down below it, we still closed not only above support, but also above the trend line that we have. And then today, I hope you're watching this stock mode. Look at that pickle, right? Look at that pepper. Look at that pickle. For this one, that cucumber popping back up above Man, like I think that 50K is not necessarily off the table for this one, but I did cash in on Mara a little bit early on this one just because I didn't know what Jerome Powell would come out and say. But now that he did spoke, I'm going to consider, we'll watch this and maybe I'll take another position through Mara, through the Bitcoin miners that are out there. So that was incredible watching that happen for crypto. And I'm sure a lot of other cryptos are doing well also. Now, TMF, mind you, I want to remember to do SoFi as well. TMF, look at that. Incredible volume going all the way back to Wednesday, December the 6th, and then fast forward 1 week, Powell comes out, and you can actually see that this is tied to the numbers that we got from the Fed. And one of the reasons that this was such a big catalyst for us, it makes the debt a whole lot more serviceable to pull back on that federal funds rate. As a matter of fact, let's just go to, I talked about US 10Y previously on this channel, and you can see the moment. Right there's 2 o'clock, the numbers came in, and the rest is history. We just dropped on this thing, and even if we went to DXY, talking about the strength of the US dollar, same thing, just plummets on this one. And I said that the weakening dollar and then also a drop in the yields is going to be great for things like TMF, and it's also going to be great for the stock market. Last thing I want to stop by here as we talk about this is SoFi. I said I'm a long-term investor in SoFi, and look at the volume difference in SoFi as soon as the Fed came out and spoke. I'm sorry, as soon as the numbers came out at 2 o'clock and just kept on ripping up through, even beyond Jerome Powell speaking, which mind you, he only added fuel to this awesome, not dumpster fire for once, but this is just a glorious like Olympic torch kind of fire, one that we would hope to see. So if you guys want to see how I'm playing these markets, you want to see my buys and sells as they happen, the Patreon is available. The link is down in the description. I post those buys and sells over at the Discord that's available through the Patreon. I also have my Tesla stock price prediction and earnings projection available on the Patreon. There's also my options course that I have building out over there as well. And I will tell you, that is an incredible community. The guys who are over there are absolutely wonderful. I think there's a few ladies too, and they are wonderful as well. So just a good place to be. And if you want the same trading app that I use the Moo trading app for many of my options plays that I do. You can get that down in the description. Click that link, sign up using my link, and you get up to 15 free stocks based on your deposit level. So that's enough of that, guys. I just got to say, today was absolutely incredible. We got excellent news coming from the Fed. There are some things on the horizon that could possibly be storm clouds, but for right now, I say that we enjoyed the party because I think it's going to go on for a little while longer. I think we have December to enjoy it. We'll see how the year closes. January possibly to enjoy a little bit more, and then we're going to have to pay attention to sentiment as things come out and watch the economic reports as they come out, because disinflation, absolutely excellent. Returning back to that 2% level, excellent. Those are things that we want to see. Should we ever turn to deflation? That's another story for another time, and I don't want to put it in this video. It's gone on long enough. But thank you, guys. Thank you so much for watching, for following along. I really do appreciate it. I hope to see you over in the Discord should you join that Patreon with that link down in the description. And also if you want to take advantage of the Moo app, like I said, that link is also there as well. Thanks for watching, guys. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.